In the currency quadrant this afternoon, focusing on the euro, which was down 0.75% on the lows, came back a little bit, but at the end of the day, the recent euro rally doesn't hold. We were up 2 days in a row prior to today, finished down, taking away most of that 2-day rally. The euro is now down 8 of the last 10 weeks, but probably more importantly, it's down 8 of the last 10 months. So it's been a pretty weak year for the euro versus the US dollar. EU inflation data came in weaker than expected today. Year over year came out at up 1%, was expected at up 1.1%, but either way, that is well short of the ECB's target of 2% inflation. They have that same central bank target globally that everyone seems to have, that 2% inflation, and they're pulling further and further away from that goal, meaning that there won't be any sort of quantitative easing coming off any more than expected anyway. Certainly won't be any early rate hikes, and that's weakening the euro. That's been part of the story of the weak euro versus the US dollar. But as always, when you're looking at the US and the euro versus each other, the dollar versus the euro, the dollar strength is the biggest part of that. And the dollar index is now back above 97, closed 2 consecutive days lower than 97. Today getting back up toward that 97.5 level, pulling back a little bit, but closing around 97.30 and change. So the dollar strength, part of that euro weakness, as the story has been all year long.